Coming up on Market to Market, serious questions emerge over power generation following a major winter storm. USDA weighs in on the 2021 economic outlook for agriculture. The former ambassador to China gives his first-hand account of life on the front lines of trade negotiations. And market analysis with Elaine Kub, next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, February 19 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Many factors make up economic health. Each region of the country is dependent on different things, but one area that unites us is shopping. January marked the largest increase in 8 months for retail sales as $600 stimulus checks quickly fueled activity. A jump of 5.3% came in all sectors, driven by purchases of new furniture, clothing, and appliances. The rate of new home building slumped as several factors like higher lumber prices weighed on the pace. However, applications for building permits spiked, signaling activity ahead. The existing home sale market rose slightly in January as record low inventory pushed prices higher. The Rural Main Street Index again climbed above growth neutral as sharply higher commodity prices and federal farm support boosted bottom lines. North Dakota is one of the states surveyed by Creighton University, and the town of Grand Forks was like many in the region that spent 11 days without breaking zero. The Arctic blast of air was not exclusive, as a winter storm hammered the state of Texas with a 1-2 punch that's going to leave the state staggering for days and months to come. John Torpy reports.
A polar vortex blanketed the lower 48 states with record-setting cold temperatures this week, leaving millions of people without power and sending natural gas prices skyrocketing. The National Weather Service reported that by Wednesday, more than 100 million people nationwide were under some type of weather warning related to the record-breaking Arctic cold temperatures and multiple winter storms. While places north of Interstate 70 were able to weather the freezing temperatures with relative ease, the cold snap and icy winter conditions brought life in many southern states to a standstill. In the Lone Star State, the record-setting polar vortex froze natural gas supply lines that feed electric company generators, just as people were turning up their thermostats. As of Thursday, the Electric Reliability Council of Texas announced a continuation of rolling blackouts across the state as crews work to reestablish power for millions of residents.
Every source of power that the state of Texas has been compromised, whether it be renewable power such as wind or solar, but also, as I mentioned today, access to coal generated power, access to gas generated power, also have been compromised, whether it be with regard to systems freezing up or equipment failures.
Farmers growing winter produce also may have taken a big hit from the polar vortex. According to the Texas International Produce Association, of the 40 different varieties of produce grown in Texas, all but 3 may have significant damage. For Market to Market, I'm John Torpy.
USDA issued its early acreage guess this week at its annual Agricultural Outlook Forum, providing signals of reports ahead. The government agency also shed light on headwinds U.S. producers are facing from weather and trade. Josh Bittner reports on the meeting.
This week, USDA kicked off their annual Agricultural Outlook Forum virtually as a sign of the times.
Now in its 97th year, the forum continues to serve as a unique platform for our stakeholders to connect, exchange ideas, and discuss some of the most important issues impacting the agricultural sector.
The agency projects the largest three-crop total for wheat, corn, and soybeans since 2016 at 227 million acres. Those figures are up nearly 9 million acres from 2020, which was impacted by the coronavirus pandemic and extreme weather events like August's derecho windstorm. Economists expect a turning point for ethanol producers as COVID-19 vaccinations give way to a rebound in driving.
On the other side of that, we've had really pretty good domestic demand for livestock and pretty good trade demand for things like pork. So again, those folks will feel the pinch of higher feed prices, but so far demand's been pretty robust as well for those meat products.
A forecast for increased feed demand as herds recover from African swine fever is one of the many reasons China remains a beacon for U.S. farm products. Analysts see the EU and Brazil as the nation's biggest rivals.
Just a reminder, if we grow it in the United States, we are competitive. So we look at exports as an opportunity and trade as a lifeline. If we can't sell it overseas, that will weigh down on the prices that our farmers receive. That will have a negative economic effect in rural America.
Even as the U.S. butted heads with its largest trading partner under the Trump administration, and Phase 1 trade purchase agreements have fallen woefully short, pundits don't expect big changes soon.
Personally, I think that the tariffs are not a particularly good instrument to use. We're basically shooting ourselves in the foot. But President Biden is certainly not going to rush in to removing the tariffs. In general, the administration seems to be taking a pretty wait-and-see attitude concerning its relations with China.
While bitterly cold temperatures have sidelined much of the U.S. in recent weeks, increased snowpack could improve drought conditions. But USDA number crunchers caution weather always gets the final say. For Market to Market, I'm Josh Bittner.
Terry Branstad is the longest-serving governor of any state. During his time in Iowa, Branstad saw the rise of renewable fuels as a source of energy and the use of Hawkeye State farm products destined for foreign ports. He also had an early interaction with an international delegation that included Xi Jinping, who eventually became the president of China. Following the election of Donald Trump, Branstad was tapped to be the U.S. ambassador to China. I had a chance to get the former ambassador's thoughts on what worked with Phase 1 and some advice for the new administration on how to deal with the world power.
Well, first of all, we are the largest economy in the world, and we have done more to help China to join the World Trade Organization and invested in China. So we've done a lot to help China. And this administration said, and the Chinese love to have these dialogues where you have these discussions that doesn't lead to anything, and they say, well, yeah, we're going to reform and open up, and then it gets delayed and delayed and delayed. And Ambassador Lighthizer, and initially I wasn't so sure about him, but I became very impressed with him. He is very focused, very meticulous. Not only did he get, and it took us 2 years, it was a long, hard battle, and we had to use tariffs to get their attention, but it worked. We did get their attention, and we got them to address longstanding issues like protecting intellectual property rights, preventing the stealing of technology like they have with corn seed here and things like that, but also dramatically increasing the purchase of agriculture, energy, and manufactured goods from the United States. The Chinese have now purchased record amounts of corn, soybeans, pork, even beef and chicken. And the result has been the price of, ever since, I think, September, soybeans have gone up from about $9 a bushel to $14. Corn's gone up from $3 to $5.50. It's made a real difference for the price we're getting. And the prices are even higher in China.
But it is short of what the projections, or at least what the deal was. And there's...
It's a 2-year deal.
It's a 2-year deal, and it's going to be a heck of a amount of purchases that are going to have to be made in this second year. Are they going to be able to do it?
Well, I think they're able to do it. The question is, do they have the will to do it? And the administration, the Biden administration, needs to insist that they abide by what they committed to. Now, I think there's valid reasons why it got off to a slow start because of what was happening with the virus. But now they've caught up to a great degree in the fall. And they've done more on agriculture than they've done on energy or like aircraft from Boeing and things like that. So there's still a lot they need to do. But we need to not only do that, the other part that didn't get done, the phase one didn't include eliminating the subsidies of the state-owned enterprises, which really distorts the market. And that's what the new administration needs to focus on. That's what the Trump administration was planning to do in a second term.
Well, and the Chinese-owned companies have long been a source of look for them for signs, because that's usually an indication of what the government wants to do when it comes to buying soybeans or corn.
That's right. In fact, one of the last groups that I met with before I left China was COFCO. They're the biggest Chinese purchaser of agriculture products. So I made the point that they had made progress on a lot of things, but they hadn't purchased ethanol. And now they've made a commitment. They're going to make a record purchase of ethanol in 2021. We need to see that they do that. They need to do that to help reduce pollution. They're still using MTBE, which is poisoning the groundwater. So we've made some progress, and the embassy actually started monitoring air quality years ago, and that has helped convince the Chinese they need to get serious about air pollution. But they have a huge problem with both groundwater and soil pollution, and we can help them, and certainly ethanol and biodiesel, and for that matter, DDGs is great livestock feed. So I'm very hopeful we're going to see that, and that's one of the last things I did with both COFCO and with their chief negotiator, Liu He, before leaving China.
As we sit here tonight is a phrase that we've said many a times on Market to Market. As we sit here today and have this discussion, Ambassador, has phase one been a success?
Oh, it's been a great success. Just ask the farmer who's seen their price of corn go up from $3 to $5.50. There's no question about that. It's not perfect, but it's a good first step, and we need to continue to move forward on that. China is a huge country with a huge population, and with the growing middle class, there's more and more demand for protein, and pork is there. And of course, they've been hit by the African swine fever, which they're really rebuilding their pork herd. And that's one of the reasons why they need the corn and soybeans.
Which is a concern if you're looking at the market from an outside perspective, not your inside perspective of what was going on over there, to say China needs to feed their people.
Right.
That's why they're buying. It just so happens it can fall under the umbrella of phase one.
Well,
is that
that's
an accurate statement?
Well, yeah, I think that's true. But the Chinese people love the quality and the reliability of American food. Hormel, Kentucky Fried Chicken, Quaker Oats, all of those things are very popular with the Chinese consumer. And so I think we need to continue to press them to fulfill the commitments they've made. And it's in their interest as well, because frankly, what they're importing from us costs a lot less than their local prices in China.
Ambassador Terry Branstad, thank you so much for your time. I appreciate it.
Great to be with you. Thank you.
This is only part of the conversation. The full interview will be released Tuesday as part of the M2M podcast, which can be found via our YouTube channel of Market to Market or wherever you get your podcasts.
Next, the Market to Market report.
Weather caused different problems domestically and globally this week, impacting the trade. March wheat improved 14 cents, while the nearby corn contract added 4 cents. The Chinese returned from holiday, but the full buying spree did not. Nearby soybeans gained a nickel. March soybean meal dropped to $2.90 per ton. May cotton expanded by $1.82 per hundredweight. Over in the dairy parlor, March Class 3 milk futures declined 19 cents. Red in the livestock sector. April cattle shed $1.50. March feeders fell $1.72, and the April lean hog contract lost 70 cents. In the currency markets, U.S. dollar index dropped by 8 ticks. April crude oil decreased 45 cents per barrel. COMEX gold fell 40.70 per ounce, and the Goldman Sachs commodity index added more than 10 points to finish at 468.55. Now here to provide insight is one of our regular market analysts, Elaine Kub. Hello, Elaine.
Hello, Paul.
I'm so used to seeing you on the screen. To see you in person is going to just give me a moment, okay?
I'm not a cat.
Is your dog around that might come in on like it did the one time?
No, not today.
Oh, not today. All right. But you were one of the more memorable guests we had there. I just say that only happened. That was great. How is it when you make the trip south? You've made this trip to see us for years. How often is it that you, in the middle of winter, had to go south because Mother Nature didn't leave any snow for you in South Dakota, but there's a whole bunch of it here in Iowa?
That's right. The difference between the snow in the west and the north versus the center of the Corn Belt is actually a market story. You know, I heard that there's more snow cover in Austin, Texas right now than there is in Aberdeen, South Dakota. So, I mean, that is influential to the markets, especially when you think sort of longer term or the outlook for the weather as we get into planting season.
And that's something a lot of people have asked. We have a lot of weather questions, but the reason I bring up the weather first is because of wheat. You can kill wheat 6 times in an off season, but when it's cold with no snow cover,
right,
that's got to make a difference. What are they talking about in some of those high plains areas where there's no snow cover?
Yes, the western high plains. The hard red winter wheat market is in sort of a liminal space right now because, you know, you mentioned the price changes. Kind of nothing really happened this week for wheat price-wise. But as far as the fundamental scenario of the weather, actually it did make a difference. That extended period of cold across the western high plains did make a difference. Yes, soil can be an insulator, snow can be an insulator, but central Kansas didn't have the snow to be an insulator. Eastern Colorado, where they have severe drought, of course, doesn't have snow as the insulator. Northwestern Kansas had those extended low temperatures. So yes, the soil is freezing, and it's certain there will be some winter kill to the hard red winter wheat crop, but that liminality I mentioned is because we won't know exactly how much for a while. It could be months, you know, obviously it will be months before you really have an assessment of how much winter kill there was. The good news is Kansas farmers or anyone in that geography will be able to plant milo in the spring to replace it and see very favorable prices.
Oh, milo. See, I had a question about sorghum later that we'll talk about in Market Plus. Same thing, yes. So, given what we know about winter kill mite or long-range problems, drought, we haven't even gotten really into the drought conditions in some of those same areas. Does this wheat market have any more rally to it, or are we just beginning a rally?
Yeah, but price-wise, I don't know that we're going to see wheat prices take off immediately because we can't observe. We cannot observe these facts yet. It will take until the spring. However, you did notice a response from the commercial side of the market to the Kansas City wheat futures, their structure. They are still in a carry spread structure, but that July to September carry spread, you know, got trimmed down to about 2 cents this week. So the market did respond to the concerns that there will be less of it, but there's still, let's say, enough. The long-term expectation for the 2021 marketing year is for still to have 30% stocks-to-use ratio. So this is not like a corn or a soybean story where you're talking about, you know, hugely bullish prices.
To a point until this week in corn. Moderate gains, 4 cents. We've seen, at least this week, when you look at it on a week-over-week factor. Are the high, wild times behind us?
No, and actually, you know, I'm glad you mentioned volatility because the volatility is really interesting this next week. For the next 5 days, the volatility will make a difference to the crop insurance premiums. You know, obviously during February, we know that the crop insurance reference prices will be set for the new crop, but not just the reference prices. The premium prices, too, are dependent on the volatility of the prices. So having, you know, more volatility we haven't seen in recent years is going to be a big deal when we get to the end of the month.
I was trying not to say the V word this week, but you know it's coming. I mean, it's out there. So I guess if you're sitting with corn right now, if I'm one of those few that still have old crop, am I selling right now?
It might not be so few. I mean, I think farmers are bullish and optimistic. But weather-wise, yeah, the basis market has been strong, has continued to strengthen because of the weather. You know, we're trying to motivate these bushels to come into town. Yeah, I don't think it's a bad idea to be selling. These are obviously very favorable prices to be selling. And at some point, you've got South America coming in and relieving the global market for feed grains to some extent. So right now, in the past, we've had the China buying story. Obviously, the export sales this week came down. Lunar New Year sort of time frame. That's not totally unexpected. But that big buying spree in feed grains might be behind us. China might now be comfortable with their strategy of stockpiling some of those feed grains. So most of that bullishness may be behind us, and we may have to worry about bearishness in the future.
What about in soybeans? Are the Chinese coming back to that market, or is that in the rear view? You
know, I don't want to say that it's, I guess I'd say, let's say neutral. Let's say I'm net neutral for price-wise, because there is still tightness, obviously, in the supply and demand scenario. The outlook that the USDA economists have mentioned, you know, this week at their outlook meeting. It's very strong for soybeans because of the past usage from China and others, for feed grains, for the soybean meal, but also for the oil. You look at any sort of oil seeds, you look at the Malaysian palm oil futures are also churning higher, canola prices, $25. You know, there's just bullishness everywhere for soybeans, and I don't want to say that the party is over.
All right, so if the party's not over, what's the target for getting into the next round of the party? For let's go on the deferred the November contract.
The 2021 contract, that's at 1170. So in a new crop scenario, that soybean price to corn ratio is about 2.6 to 1. It's in that sense, soybeans are overpriced, actually. I wouldn't necessarily expect to see that 2021 market be churning higher above $12, $13 that we've seen in the old crop market.
All right. In livestock, again, back to the weather. That has been a major thing. Cattle on feed came out today. It's in one of my many stacks of papers here, Elaine. On feed 101, placed 103, marketed 94. These numbers compiled prior to this week, but what did the weather do to this cattle market?
Yeah, I wouldn't make too much of the cattle on feed report because, yeah, it's within expectations. That marketing number was lower, but weights have been higher, so there's a lot of nuance. I wouldn't worry about that. But the weather, you're right to point out. We could say that this past week is maybe like a mini Holcomb in the sense that there were plants that were shut down. There were shifts that were canceled because of the weather. You couldn't get people into plants in Texas and Mississippi. So you've got a scenario where the boxed beef prices are still very strong. The profitability of making beef is still very strong. $238 for choice, I think, in the boxed beef. But meanwhile, the packers are not going to be paying up for the live cattle. Live cattle traded about $114 this week in Texas. They won't, you know, there will be that advantage to the packers again because of that shutdown, and that makes that structure unfavorable to the feedlots, but hopefully just in a short-term scenario this time.
I was also trying not to say advantage packer on the show this week too, but
sorry.
There we go with that. That seemed to be a common theme. In the feeder cattle market, they've been hanged with higher feed costs, but it's also hard to, you have to feed extra now because of those cold conditions.
Well, and again, and that's sort of behind us. But feeder cattle, I mean, the demand for that market is very strong in terms of the quantity that people want to buy. People are still, even at these feed prices, the feedlots are eager to be out there buying. They just only at a price, right? There's just only so much that they can do price-wise. And you see that on the futures chart specifically. There's resistance, and you don't really want to expect to see that recover much more above 145.
In the hog market, again, hanging on several things as well. What's the biggest driver, do you think?
I think this past week, and we haven't really had a lot of new highs this past week, it sort of pulled back a little bit. I honestly think it's related to the fact that the daily and futures weren't trading. You had those 5 days where they were shut down for the Lunar New Year holiday. So if you don't have that arbitrage and new information each day about how expensive pork is in China, because their herd recovery has not been as extensive as maybe they planned or they wanted it to be. Pork production is expected to be up 14% in 2021, but that's not a huge enough recovery. So pork prices are still very strong in China, but we just didn't have that news this week, and I think that's why prices had one less thing to drive them higher.
All right, in the last 60 seconds, I have a question from Zach in Lawrence, Nebraska, and this is about strategy for everything. He says the marketing plan for the last 5 years has been 25% before Southern harvest, 25% around planting, 25% before July 15th, and then hold 25% for after the harvest. Is that still a good plan as we move into 21?
It's okay, but there's a lot of nuance in there, especially because he's from Nebraska. Is he irrigated Nebraska or is he dryland Nebraska? Because if you're a dryland farmer in the western Corn Belt this spring, yes, there's an expectation that La Nina might let up in May, June, July timeframe, that we might very well make the USDA's expectations for, 175 bushels per acre. It's possible, but I wouldn't be as eager to sell early if you were in the western Corn Belt where it is so dry.
Okay, we'll flesh that question a little more in Plus because I know that's a big curveball to throw in the final 60 seconds, but I wanted to hear it. Thanks, Elaine Kub. Good to see you.
Good to see you.
All right, that will do it for this installment of Market to Market, the TV show. We will talk more in Market Plus, so you can join us there. Find that on our website of markettomarket.org. And here's the thing. Algorithms are nearly impossible to figure out, but we know one way that you won't miss what we post on Facebook. Just dial us up on our page directly at facebook.com/market-to-market-show. Like the page if you haven't, and check out our content. The more you like, the more of us you'll see. Next week, we'll look at the energy debate sparked by the Texas storms. Thank you so very much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing. Store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.